gold could come back a little bit, but gold's not coming back to where it was a year and a half ago. Anytime, I don't think this decade we're going to see 2,500, 3,000 gold again.
They now have to keep printing or we crash.
We've got this ticking time bomb.
Talking gold with the one and only Andrew Maguire.
Welcome to Live from the Vault.
Welcome to Live from the Vault, brought to you by Kinesis Money. And this is the show that goes beyond the headlines to uncover the truth about the gold and silver markets with world-renowned whistleblower and industry expert, Mr. Andrew Maguire. And this week, he's joined by a very special guest. You know him very well, Mr. Robert Kientz of the Freedom Report. Now, if you haven't checked out, he has a bi-weekly podcast. You might want to check it out. We're going to leave a link below, and it's called The Freedom Report. And today, we're talking gold and silver, and you're not going to want to miss this conversation, every word of it. So let's head over to the UK and join Andrew Maguire and our featured guest, Mr. Robert Kientz. Over to you, Andrew.
Well, thanks, Shane, and thanks for joining us, Rob. Honestly, it's been too long. We were just saying, how come the last time I met you was actually in a pub in the Cotswolds. We were talking about filming, and we were doing a bunch of filming and stuff. So I just can't believe we've left it this long because there's so much to talk about. But thanks for joining us today.
Yeah, happy to be here. And that was a fun time getting to meet you actually in person, Andrew. I followed you for years, and just getting to sit down and meet you in person was a blast. And loved my trip out to the UK. It was a lot of fun. And yeah, a lot of stuff has happened between now and then for sure.
And I think let me just for a minute, because it's been so long, and many of the new subscribers will not know this. I remember something you did. You're a forensic accountant. I know you are. That is one of your major skill sets, and it's rare to have someone within the gold, our gold world, who has that kind of specific skill set. And I think what happened was, and many people they won't even know about this. Many people will remember because long-term subscribers and people will know about it. But what you did, I was fascinated by a deep dive you did on the Perth Mint, the Australian government Perth Mint. I was absolutely fascinated at what you discovered. And when you did a forensic accounting, I would ask you to maybe run through what you discovered there, because it changed the way a government was dealing with gold.
Yeah, the Perth Mint is sort of what I call one of these semi-governmental. It's really a government. It's a government agency, really, out of the Western Australian government, but it's sort of semi-government in a way in which they operate in the free market. So it's run by the government, so they have to report their financials, unlike a lot of precious metals companies, which are private, which don't have those reporting requirements. But they run it on behalf of, the people that anybody can go to Perth Mint. And certainly they have their bullion sales. You buy your Perth Mint coins and bars, which are, by the way, some of the most beautiful ones on the market. I have to commend the Perth Mint for their design work. They've been exceptional men at producing, product. And a lot of people were using them for storage as well. And they had a couple of different products. I had an ETF going at the time. And this is 3 or 4 years ago that my friend Daniel Vergario and I went over this. He was a chartered financial accountant. I'm a former auditor. So he brought it to me. We looked through the records and we found out essentially what was happening was there was about 920 million Australian, $920 million Australian that they had essentially sort of leased out, and it was customer gold and silver, we think, or we're pretty sure, because looking through the financials, it's obvious that's what it was. And they couldn't hide it in the financials. It really just took somebody with some experience to go look at it. And when Daniel looked at it and brought it to me, we went deep dive on it together, and we're like, holy cow. Because in a private company sense, you're not going to see that. So the question really becomes, how many, gold storage companies are doing this sort of thing where they don't produce the audits of the metal. And so it's very important that when you're seeking out a company, that they have public reports of the audit of the metal, and that you pay attention to those. And not all companies do. But anyway, Perth Mint did, because they're government, so they have to report. So we went through, it was 920 million. And they tried to claim that that was work in progress, that that was metal that they received, that they were turning into coins and bars. But that number was so big as to be unfeasible, because you can't take in $1 billion in metal and be working on distributing that without the sales, to back that up. So no company ever does that. It didn't make sense. And their accounting said something different. The way that they were treating it on the books was different than what they came out publicly and said was going on. So there was a big discrepancy. And what ended up happening, our investigation, it made it all the way to Kitco. Kitco was doing news stories on it with their CEO and the guy from Goldman Sachs that they brought in to set up this scheme. And it was funny, they had to basically unravel it. The CEO eventually got fired. They had to unravel the scheme. So the next year we looked at their financial reports, Daniel and I did, and they had unraveled all but about 300 million of it. They had somehow gotten some of the gold and silver back. I don't know if they had to go claw it back. They also, for their ETF, they sold it to Goldman Sachs. And as soon as they sold it to Goldman Sachs says it's non-redeemable. You cannot get your metal. And I suspect that the amount of metal in the ETF was never there. It had been leased out or rehypothecated, if you will, whatever you want to call it. And they hadn't been able to get it back because Goldman took it and said, well, you can't ever have your metal. So you can be in this ETF, but its price, it's access to price movements only. So those that had invested in the Perth Mint ETF with the thought that maybe there was a redemption there somewhere along the line, that was basically ended. So we don't know if that gold was ever put back. They're claiming on their books that the rest of it eventually, made it back to the balance sheet, and it's there for the customers. It's not been leased out or given out to someone else. But I wonder if that accounting was 100% correct. And what happened after we did that investigation, John Adams, who many in the precious metals industry know very well for his activism and his show that he's done for many years looking at the gold market, especially there in Australia, took up the case, and he said, Rob, this is so egregious. And he was a former member of the Congress of the Parliament in Australia. He had served for a long time. He'd been, a public figure, and now being a very prominent, show within the interests of the people he does with Martin. So anyway, he took it up and he said, well, I'm going to investigate. So he went to the government and he got, I believe it was ASIC, which was the regulator, to admit that, he got the Parliament or the Congress to investigate ASIC, because he went to ASIC first, the regulator, and he didn't feel like they were doing their job, and that they investigated and they came back and it was sort of a weak investigation and it didn't make sense. And he took them to task and said, no, you're not doing this properly. So he had the government investigating the regulator that was supposed to oversee this mint, the Perth Mint. And so not only was the Perth Mint in trouble and basically had to unwind their scheme, which I think they're probably still doing to this day. As I've looked at the financial reports, it seems like they're basically working that direction. But also the regulator wasn't doing their job, apparently. And so there had to have been changes made. And it's much like the U.S. See, the regulator for the metals industry in Australia is much like the U.S., in which it doesn't have the teeth to do what it needs to do. ASIC didn't have the teeth really to regulate the gold market the way that it needs to. And there needs to be fundamental changes to the way that works. And that's kind of the key takeaway, I want your listeners to understand is much of the regulation around the physical gold and silver industry through the governments is very weak. Like the last major act that we had passed on the commodities markets in the US was like in the 70s with some minor updates. So a lot of this law around, we're in this modern age with electronics and these fast trading systems, and we don't have the investigators here in the U.S. I interviewed the guy that did all of the investigations for the CFTC a couple of years ago at Silver Symposium. And I put the result of that interview out on my channel, and I walked through and I asked him a bunch of questions. I said, do you have the investigators? And he said, well, there's 1,000 products on COMEX and we would need 1,000 investigators because we have a system to catch all the trade information, but we don't have anybody to analyze it. And for my time as an investigator, you have to have people involved in the process to see, are people adhering to the rules? The computer systems by themselves are not self-regulating. Maybe AI eventually changes that, but we're not there yet. And so you really need human investigators to investigate data to see, if things were done correctly. And what I also found out eventually, Andrew, was as you look at the worldwide gold market, when you look at the COMEX, the regulator, the CFTC, gets some of their data from the trading houses, not from the exchange. And that came out during a cybersecurity investigation because there was a cyber breach of the CFTC a couple of years ago. They came out with a letter saying we're still collecting data. And they came out with a press release saying we're collecting data from the traders. And so I sent an email to them and said, what do you mean the traders? And and they didn't want to answer me at first. And I kept pressing. It came out that they don't have, all the access to the information directly from the system. They have to get it from the third parties running the market makers. And it's kind of like the fox guarding the hen house. And so when you add that together with the fact that they don't have enough investigators, and with the guy that did the investigations for many years, he was there for many, many years. He'd been in gold market for 30, 40 years in sales and then as an investigator. So he's well qualified. He said, I have to hand my investigation over to another group, which does, decides whether there's any penalties or any action taken. He's like, it's a black box. I don't see it after that. So the investigators collecting the information aren't getting clean information. They don't have enough people to do the investigation. The investigations they do hand over go to a black box, and they have no say after that. And the legislation for ensuring that the trades are fair lacks the teeth for enforcement anyway. So they have limited enforcement actions that they can take. And most of the work done here in the United States on regulating the gold market has actually been done by the Department of Justice and RICO statutes and stuff like that, where they fined JP Morgan $920 million a few years ago for manipulating both the Treasury and the gold markets. That doesn't come through the CFTC. Why doesn't it come through the CFTC? They don't have the teeth, the capability to do what they need to do. And what we saw over in Australia, bringing it back to the Perth Mint investigation, neither does the regulator there. So it explains a lot why, a lot of these markets are very opaque, and this kind of stuff goes on, this sleight of hand with, do we really have the gold, and are we, leasing it out and doing a double trade on it so that people don't know. And I think, Andrew, that the investigations I've done into the COMEX and the Perth Mint illustrate that there's a lot of room for improvement over the regulatory agencies. There's a lot of unknowns with all of the major gold markets on how much gold do we actually have. I mean, you talk about London all the time in that market, and none of these markets are perfectly transparent. None of them has the proper regulation. We don't know how much gold, how many claims are on every ounce of gold and silver. And that's the way that these markets exist. And it creates uncertainty for people to enter these markets. And I suspect that a lot of this kind of stuff and all the scandals that have happened are why, like right now, we have record gold prices. Silver's past 40. I mean, there's not a lot of resistance for silver to hit its all-time high at 50. Goldman Sachs has said gold's going to be 4,000 this year. If gold goes to 4,000, I would be shocked if silver doesn't touch 50 at that point. Like, why wouldn't it, And the mining stocks are starting to kind of think about coming to life. But the generalists have not come in, and the retail sales in the United States are not booming just yet. Why? This is the first time I've seen this level of strength in the gold and silver market, and the mining stocks are not responding, and the retail sales are not responding. And I think part of it is that people are not sure whether to trust the market. I think they're also waiting to see, whether the government's going to be able to control inflation, and we can get into the whole discussion about the Fed and interest rates here in a minute and what they're going to do. By the time this video comes out, we'll know. But I think the generalists are kind of looking at the gold market askance here in the United States. And when I talk to people who buy gold and silver, I know a lot of people who buy gold and silver every day. They're stackers. I go to conferences. We just went to the big World's Fair of Money here in the United States in Oklahoma, 800 tables. And you talk to people, and there's a lot of uncertainty as to, is this market real? And with all the shenanigans that went on, is there true trust in this market? And I think that's pushed people over more into things like stable coins and the digital assets. And now the digital assets, people are going into as much as they're going to gold and silver. And the question will be going forward, is there going to be a rebalance? Is there going to be an event in which people decide, I'm out of treasuries, I'm out of stocks, I'm going into gold, silver? And although we have record prices in gold, that hasn't happened yet. So that's really kind of the next step, is the retail boom. And I've seen in the last couple of weeks in the Kinesis store, which we run Kinesis Bullion here in the US, we've seen an uptick in orders, which is nice. We've also onboarded a lot more dealers that want to deal in Kinesis products, but we're not quite to the boom phase yet. We haven't quite gotten there. We're just seeing a nice little uptick. So you're starting to see some interest in gold, but what we're not seeing is people entering. And bringing back the investigations, I think the investigations are good because they tell people what's going on. But I think a lot of people look at it and say, what's going on with the gold market? It's not one of those markets that people have tremendous faith in all the time. And we really need to work to restore that. We need to have honesty and transparency. And that requires everybody getting involved in passing laws, which is what we do with C4SAM, which is passing the laws around allowing gold to be used again as money. So, but there are other things that need to occur. There need to be laws passed in all of the Western world regarding regulations of the markets and transparency of the markets. And I think that that's probably coming, to be honest with you, because I think the what we're going to see is the death of the dollar. We're going to see deglobalization continue. We're in a multipolar world now where you've got the BRICS doing their own currencies and their own trade. And it's going to force the Western markets to be transparent, because if they're not, the money's going to move east and people are going to invest over there, and they're not going to invest in our markets. And the gold and silver market is right there with the stock market of, do we have confidence and do we have faith? And I think faith will come back. I think the world's going to come back to gold in a big way. The central banks have done it. They're doing it even to bolster with the CBDCs as a high quality liquid asset, tier one asset. But the public's not there yet. I think that's where we're sitting is we have this really robust gold and silver market and the public's not dipping their toe in. And some of it is mistrust and some of it is other asset classes that people are moving into. And I do think gold and silver are going to come back and be the asset of last resort again. But I think now they have more competition and there's more thought about, well, what gold product do I invest in? I recently had to comment on a story. I was asked to comment on a story about, it was a generalist publication, a major publication in the US, and they're asking me, what are ways to get into gold? And I left them like 6 long voice messages on how to invest in gold. And I said, that's a complicated question. You've got different products. You've got your ETFs. You've got your physical. You've got lots of now. You've got Kinesis where you can get in and you have your digital gold. And you have other companies that do that. So there's lots of options, and it depends on what you want to do. And so not only is there a trust issue with gold, I think the products have grown up and there's a lot more optionality there. And it's good that we're doing these stories now because it shows that people are interested. But I think we're not quite to where everybody's diving straight into gold just yet. I think you've seen the strength in the gold and silver market, but I think the trust and the generalists wanting to get back into it, we're just kind of on the edge of that right now. We're not quite to where everybody's diving in and they're investing in the gold ETFs and things like that.
No, that's really interesting. And it's amazing how that all interconnects. And I think there's so much to pick up on there. And essentially, it's really interesting to find out what's happening your side of the pond, because really when we look at the markets here and in Europe and in Asia, it's never stopped. People have never stopped buying. And so, and you only have to look at every single other currency. They were way, way ahead of the dollar rise. They were making all-time highs a long time ago. And because people were, and especially if you're from Germany and your parents and your grandparents have instilled in you, hey, there was a time when you needed a wheelbarrow of money, of what they called money, to buy a loaf of bread. I mean, so talking about hyperinflation. So really, the average German actually has been saving for decades. Since then, a little bit of their money on their paycheck goes automatically into a gold savings account. It's government sort of sanctioned, and it's been going on for years. So it's really interesting to see, because I think it's so understandable when people look at the gold market, and you've just described very well the confusion and there's a lack of, well, I don't really understand gold. That's because, as the WikiLeaks leak confirmed back in before the COMEX was launched in 1994, let's create a market that's going to have volatility. Let's create uncertainty. Let's keep people out of gold. And we've seen 50 odd years of a market that was really a synthetic derivative market, had no resemblance to the real markets. And suddenly what's happened is, and what is amazing, is it's taken up until I think the yuan became Basel III compliant, and suddenly the only central bank not Basel III compliant is the US Treasury. The Fed is the only central bank that still hasn't got on board, and will obviously be forced to revalue gold at some point very soon. But what it's doing is suddenly we talk about getting overbought. Yeah, that's old hat. Yeah, overbought in what sense? The paper market's overbought? No, it's not. Because when you suddenly weigh up that the price is being set outside of the paper markets and is liquid enough to actually discern a real physical price where I first have to own that bar, ascribed to me before I can put it up for sale, as opposed to just putting like 4% of skin in the game and playing some ludicrous game with everyone gaming me. And it's like the casino, well, you're going to win 5% of the time and the house is going to win 95% of the time. That's gone. The price is being determined outside. So suddenly we're seeing this sort of where the cartel operated, where the Fed operated, was in this siloed world of the COMEX. And suddenly they've become price takers, not price makers. And I think it's so interesting now that you mentioned that the retail market is starting to wake up, because what they're seeing is a distinct lack of 50 years of volatility when you get massive smashes, because every time they try and sell it off, there's a buyer down there and it's taking it out of the COMEX and it's draining all that paper market liquidity into physical exchanges. So it's really interesting that you talk about they're only just starting to wake up. Where do you think, I mean, you've been exposed to the physical markets in America for a long, long time. You're also involved with sound money movements. Where do you see it? Because traditionally, Americans have had so little exposure to gold. What's the potential here if they all start waking up to it? What do you see as a percentage, as the potential?
Yeah, the potential is really the sky's the limit. And, you talked about a lot of interesting things. The movement away from Americans pricing the gold market probably started 30 years ago, really, when China was hoarding all their gold and wouldn't let any of it out of the country. And I went back and did a study on that. And I wrote an article for a big precious metals retailer here in the US about a year and a half ago about China gold. And I went back and looked at every piece of data I could find as to how much was coming in, how much was going out, how much they were producing. Understanding those statistics aren't perfect, but they're pretty good. And I was even looking at, cargo shipping and how much, on a UN website about how much gold left China, to figure this out. And I figured out, I think they have 25 to 30,000 tons minimum, because if you look at their production, they kept most of it in-house. Some of it went to Hong Kong for jewelry, but a lot of it went right back into China and back into the Chinese market as jewelry. And so that 30,000 tons is probably a mixture of what they hold internally, the central bank and their sovereign wealth fund, which they don't report on, by the way, which is where I think the majority of the gold is. It's not on the central bank, so they don't have to report it. But it's also sitting in the hands of the Chinese people in many forms. It's the jewelry through the dowries and the ceremonies, but it's also coins and bars. And China has been recommending to its citizens to buy as much gold as possible. And that's created this demand, which kept all the gold in China. And China is also intervening in other markets, including the COMEX. And I've long suspected, and many people have, that they're using the bullion banks to offtake gold from the COMEX to take as much as they can. And I think with the BRICS, a lot of nations in the BRICS produce a lot of gold. You've got South Africa, you have Brazil, you have China, you have Russia, you have India. So there is enough gold within that network that they're going to be able to basically reprice the market. And that's what's happened. And then, of course, you had the tiff between the Dubai market and the LBMA, where the LBMA was trying to control them and said, hey, you've got all this artisanal gold. We want controls around it. And Dubai said, no, we're good, buzz off. And basically told the LBMA, we don't need you anymore. And so now what you have is you have this bipolar gold market. You have East versus West in a lot of ways. And we've all been talking about that. A lot of gold commentators have been talking about how the gold was moving west to east. And it started in, like mid 60s to 71, where the Europeans took 2/3 of Americans' gold because we overprinted our dollars. And then we got off the gold standard. And now it's just been happening through the derivative markets. So that's really what's been happening, is there's been this slow offtake of gold, and now it's a fast offtake. And as you mentioned, when you have these foreign players in this market, no longer can the big four bullion banks control that market. And there's been speculation. Will Bank of America, is JP Morgan, Bank of America, HSBC, and Citibank. They're the four big players that's in the office of the comptroller, the currency report, which I did on my video that's out on my channel. It came out last night. And so I go over there every once in a while just to show people, these are the four banks, these are their derivative positions. And there's speculation one of these banks will go out, because if they can't get the price back down short, they can't short cover. And so all of a sudden they owe all these money on the contracts, either the metal or the money. And they can cash settle, but it's such a large amount of money that it really would hit them pretty hard. I don't know if it'll put the big banks out of business. I think the government would try to bail them out. But I do think that you're going to see some commodities trading desks in the U.S. start to go under. We had, Scotiabank that got out of the gold market within the last few years. And it was suspected they were running a rehypothecation scheme. And I talked to Nick Beresheff before, he passed away, rest in peace. And he thought that Scotia had been running a big metal scam for a long time. And he was, he ran BMG Group up there in Canada, and he certainly knew the market really well. And, Scotia got out, and we saw the fines, JP Morgan, and we've seen Morgan Stanley get fined in the past. And I think that all of the stuff that was going on, the rest of the world got tired of it. And now, for the last probably 2 years, I've been covering the Shanghai market, and I just look at their data reports, and they're moving a lot more gold than we are in the West. The prices have been higher. There's been an arbitrage. It started off being an arbitrage between Asia and the West, and now now you had an arbitrage between London and the US. And so that caused, there were issues with the London market, and then you had all that gold flooding into COMEX. And was it the US government? Was it China? Who's taking it off the COMEX? You saw those huge flows in the last year. And you can tell that the whole way that gold was flowing had changed. And if you look at COMEX, they have multiple different trade types. They have things like trade after settlement, which is once the price is determined, then you can do a trade off market and bring it on market. And people were doing that due to volatility, and people were doing block trades. And you saw all those types of trades blow up because people didn't want to trade during normal trading hours because of the volatility, because someone had come in there and changed the story. They had changed the way things were moving around. So that story is definitely plausible, that the West has lost control, and that some of these tremendous big four bank trading positions are under incredible pressure. And you're right. When I look at the charts, technically the gold markets look overbought, because remember, they were controlled up until 71. It was pegged. And then from 71 to now, it's been a manipulated market where they've come out and admitted manipulating. Rostin Benham said it in public at the Boca V conference. We manipulated silver 4 years ago during silver squeeze. We could not let it get above 30. It would have broken the market. He said it in plain English, and he was the commissioner. He still is, it became from the interim to the active commissioner. And so he was running, the regulator was saying that they were manipulating the market. Why? Because the West had to, because of this scheme. It's a giant Ponzi scheme. They could not let it get out of control. And the regulator was serving, as I said, the regulator wasn't doing their investigations. They couldn't. And not only were they not able to control the market makers and the players, they were acting on behalf of them. So that was a change in the mind of Americans about, wait a minute, the regulators are actively colluding with the traders to set the market price, to guard their trade, and to protect all the profits they're making on the futures and the options. And people don't talk about the options market. The options market, you can get in, a long or short on an option, and you can use the futures to push the price around, and you just print money on your options trades. It's like free money for the banks. And they were colluding between the two types of trades to move the gold and silver price around and make money. And they were making $1 billion a year, JP Morgan came out and said. $1 billion a year on just the gold and silver. So a lot, is a lack of confidence in what was been going on in the Western market. And now what you're seeing, the technical charts, if you listen to Northstar, who's on Live from the Vault, who does a wonderful job, they've been pointing out capital rotation. People are moving into gold. It wasn't just the central banks, it's everybody, and out of these other markets. And that is a confidence thing. It really is, but it's happening to the big players, and retail hasn't quite done it yet. And in the US, we have a really cutthroat, tight gold and silver market. It's not, it's not the biggest market, but it's a really competitive one. And you can tell very quickly when retail's in, because premiums spike, and they haven't quite yet, but they're starting to. You're starting to see it. And so what's happening is retail started to figure out the game, and we haven't even had the big generalists in. So if everybody in America bought 1 ounce of silver, the COMEX would be bankrupt of all available silver. And if everybody bought, an ounce of silver and gold, you would have major price spikes in both silver and gold because of the lack of liquidity. Because the big players have come in and they've grabbed a bunch of it. And now it's a game of musical chairs. How many chairs are left for retail to go and grab whatever metal's left? And I don't think that retail in the US really understands that. I don't think that people understand that. And so at some point, Andrew, I think what's going to happen is there's going to be a run, and that price is going to spike fast this time because there isn't a lot of above ground that's free at these prices right now that like there was 5-10 years ago. And so it's not going to take much of a catalyst for those markets to spike. And what we're already in the bull market. The news just hasn't reached the average person. They're paying attention to these other things. It's the news cycle in the US has been so intense lately with the weather stuff and the political stuff and assassinations. And it's kept people out of getting back into gold and silver. But I think that's going to change because when Americans come back from summer, they start to pay attention to financial markets, and you have the love trade in India and China with the physical, and prices always go up. So there's a lot of fundamental catalysts for gold and silver prices to continue to rise. And I think that as Americans come back and they look at the pressure in the stock and bond markets, the rising rates, which are going to devalue the face value of their bonds, they're going to be looking for alternatives. And I think you're going to start to see them start to pile in. And I think that's why the last couple of weeks we've seen it in the bullion store, the amount of interest go up. And I think we're at the beginning of that trend. And it's really, retail's really starting to, and again, as I'm writing stories for major publications, they're writing them, the journalists are going to see that. So we're seeing the build up to what's going to be an incredible run, probably starting sometime in 2026 with the physical metals, I would imagine. And again, we'll bring it back to Powell and the interest rates. As we're recording the video, the Fed is in session for September, and they're deciding what to do. And the whole market expects them to drop rates by a quarter point. And if they do, that's incredibly bullish for the gold price, especially where inflation rates are where they are in the US. When we have higher inflation in the US like we have now, and you have a Fed rate cut, that usually means you're heading into a recession or you're in a recession. And the gold market always responds to the upside. So basically, even though technically on the charts and the COMEX, gold looks overbought because it is, I think you're right. I think the market has changed and now we're playing a different game. And I don't know that gold could come back a little bit, but gold's not coming back to where it was a year and a half ago. Anytime, I don't think this decade we're going to see 2,500, 3,000 gold again. I think what we're going to see is gold is a recognition of the economic problems across the world. And instead of gold being repriced in dollars, everything's going to reprice to gold. And so the gold in fiat terms is going to continue to go up. And I think that's where we are. And we're sort of at the beginning of that phase. And I honestly don't know how long that's going to last. It's going to last until they get the debt problems under control. And when are those going to get under control? With the amounts of debt that we have, it's going to take an incredibly long time. The last time we went into a depression, it took the US stock market 25 years to recover to its previous high before the depression. So we're talking a long-term cycle here. We're talking a long-term shift in the financial markets. I don't know when it ends, but we're fully into it right now, and you can definitely start to see it.
Well, what I'm hearing here, and I think is an action call for each and every one of us, because while we've been working, you and I, and many of us have been working with the institutional side of things, and they've come on board, they're starting to buy, starting to get sticky, buy legitimate hedges, physical hedges, and that kind of stuff. What we're saying here is the retail side. The power lays within each and every one of us. So what we've just described is what better time is there for everyone listening to this episode to go out and exchange some depreciation dollars, pounds, euros, yen, whatever it is, for physical gold and silver, because the game has changed. And so the power now lays within us. The retail side hasn't caught on yet, but you can, as you just said, everyone buys 1 ounce of silver, 1 ounce of gold. The power lays with us. So speak to all your friends, speak to your family, speak to everyone. And you're doing a lot of good work with, for the Sound Money Movement, which is state by state by state, bringing a lot of the kind of people we're talking about here, to actually use money, gold and silver as money. This is a huge inflection point. What better time is there to be involved?
Yeah, I think it's a great time. And the state work that we're doing, last year, my group was directly involved either as the lead or a helper in 3 states, Missouri, Texas, and Florida. Texas and Florida are top 10 world economies if you pull them out of the U.S. I think one's 8, one's 9. I think Texas is a little bit bigger. Huge economic impact in these states, and they're 800-pound gorillas. And really what's going to happen with this is, as we pass these laws, eventually the federal level and the Federal Reserve is going to take notice and say, wait a minute. And here's the thing. When they created the Federal Reserve in 1913, they voted it in when most people were away at their homes. And if you think about the way Congress worked back then, you met for a limited time period. People had to travel from around the country. In 1913, it's not like you could just jump on a plane, everybody. A lot of people had to take horse and buggy, or if you're lucky and had an automobile, it was a long drive, So you go back for Christmas, but there's still a standing Congress. They held it open, and they passed the Federal Reserve Act with a very small amount of overall votes. And they got it into play, even though multiple times before it had failed. And so they get it in, but what they couldn't do, because they didn't have the political capital back then, was to remove gold and silver as money in the U.S. Constitution. So gold and silver are still money in the U.S. Constitution. In fact, they're the only money. And what's going to happen is there's going to be a battle. We're finally, within the next few years, going to have that battle in the U.S. where the Supreme Court has to decide what is money. Because you have the dollar, which has been practical money for 112 years, but you have gold and silver, which are still money in the Constitution. And per Amendment 10 of the Bill of Rights, all powers not explicitly granted to the federal government goes to the states and the people. And so the power, it said, and the Constitution says, no state should make anything other than gold and silver legal tender. And so the states are edifying Article 1, Section 10 of the Constitution, which says gold and silver are our currency, or our money. Okay, not currency, money. And the states are reaffirming that with passing these laws, so that it forces the federal government to go tie that loose end that it left in 1913, which is explicitly saying gold and silver are not money. They left a weakness in the system, and the weakness was they didn't get rid of gold and silver. And so there's no law that prevents people from using gold and silver as money. What the states are doing is reaffirming that to protect their citizens, to create an event where if the government wants to prevent you from doing it, they're going to have to take it to court. And that eventually it's going to go to the Supreme Court, because now we have only 7 states now charge sales tax. And I think it's 11 states that have passed as legal tender, with another 27 in process. That's the majority of the union. And so this year and next year, probably 26, 27, we're going to see probably at least half the states adopt this legislation. Because one other thing we did is a member of C4SEM, the nonprofit, was we went to ALEC, and ALEC is a conservative coalition of state and federal senators and House representatives that create model legislation that then can be proposed at the federal or state level. And so we created model gold legislation at ALEC. It's this conference. And it's been approved. And so now anytime a conservative lawmaker wants to introduce gold legislation, we have the model for them. So we don't have to reinvent the wheel. They can just take the model legislation and go to their states, and it makes it easier. Now we've made it easier to get it passed, because I said, just take this, copy and paste it into your law books, and that's the process. So we've done a lot of work to making it very easy for gold and silver to be money again. And it's going to set up that states versus federal battle. And we're finally going to get that determination of what is real money. And at the same time, we're also trying to do education in the public, because most people don't understand the history of gold and silver. And that's why this program is important. And all the programs talking about gold and silver are important, because we have to educate the people, because this is a chance for the people to take their sovereignty back. And I don't mean we're going to be in anarchy, but I mean their financial sovereignty, where the government cannot control the fate of the people simply by taxation and by printing fake money, and by getting into foreign wars and all the things that has allowed for. And I think the rest of the world wants us to go to gold and silver, because they're tired of our exported inflation through the dollar. We are killing economies around the world through exporting all this freaking dollar inflation. It's ridiculous. And that's what's made the rest of the world mad at us. That's why we're having geopolitical problems, is because of the dollar inflation and the hegemony that we haven't been able to control world trade with that. So for about 1,000 reasons, we need gold and silver to re-enter the monetary system again, at least to compete with the dollar, if not in some form or fashion to replace it. So that's what the citizens are doing. That's what we did through the group, and that's what we're doing through the states. And because the U.S. has that federated model of 2 layers, really 3, because you have your local government, but you have the 2 layers, the main layers. It allows us to go back and maybe correct a wrong. Now, will it go through? Will we win? I don't know. But through this, we hope to gain awareness, and we hope to gain grassroots support. And in every state where we pass this, we've gained grassroots support. So we are waking up the people with the legislation. The TV show that you mentioned at the beginning, we're not supposed to talk too much about it, but it'll be out on TV next spring. And that will be an education piece. C4SM is going to have an academy where people can come and, learn from all these great influencers that we're bringing together to do this sort of all-star cast of teaching people about money. And it'll be people that people trust, that they've seen on the news. And so we're doing everything we can to do the education, to do the law, so that we have a chance to return back to sound money. And it's one chance, Andrew. We got one shot at this, because what's going to happen in the next few years, we're going to have the crash. And it's really crashing right now. I would argue since 2008, we never came out of the recession. Mm-hmm. And if you look at Shadow Stats and John Williams, he's an economist, and you look at his statistics, we're heading towards a Great Depression in terms of unemployment. Even the Fed came out this week, and Powell's been saying it's not inflation that we're worried about, it's employment right now. So the reason they're going to do a rate cut is because the Fed is saying inflation's dangerous, but unemployment is more dangerous. Why is it more dangerous? Well, the BLS just came out in the last week, and they did the biggest downward revision of job creation in the U.S. that they've ever done. Okay, it was like a 3 standard deviation type of deal, meaning it shouldn't have been that big. Statistically, they really screwed it up. So over the last year, from like April to June, April last year, June this year, they reduced the amount of jobs created by 911,000, almost 1 million, the biggest negative adjustment to jobs numbers ever. And what it means is that in the last couple of years, we didn't create all those jobs we thought. And that's why the Fed is turning and saying, wait a minute, holy cow, 1 million less created jobs. We're not worrying about inflation anymore. They immediately changed their rhetoric over to, we got to stop unemployment. And when you look at the non-farm payroll number and the ADP numbers that came out at the beginning of the year, those 2 different reports that we get in the US, they were not pretty. And jobless claims of people not having jobs has gone up, and credit usage has gone up, and spending is down. So you can tell that the consumer is stressed, and that the government numbers don't tell the story. And so now that's causing the Fed to pivot on their strategy. And I think the unintended consequences of all the bad government data and lying to the people about how bad the economy's been, and then people knowing because they can't survive. One other statistic I have for you, which I found yesterday. This time a year ago, 63% of Americans live paycheck to paycheck. Okay. A year ago, Andrew, now it's 67. 4% of the entire US population within the last year has spent all their savings and is now living paycheck to paycheck. And they report that what's in their paycheck is not enough to pay their bills. That's 4% of 360 million people in a year. 1 year, that number changed 4%. That is a statistical anomaly. And it's a sign that the whole system is cratering right now. There's not enough money. Inflation is killing people. There aren't enough jobs. And the Fed is now having to cut, even though they don't want to, because we're not officially in a recession. They created 5% room by rate hikes, and they wanted to hold that for the recession. Now they're going to be down to between 4 and 4.25. They're not going to have 5 rate points to cut during the next recession. They're cutting now because we're in the recession. Okay. We're in it right now. And it's been like this shadow move of the government to try to save it, and to lie and say we're not in a recession, and to lie on the statistics. But now it's so blatantly obvious, you can't hide it. And people know, they know. And this over the next couple of years is going to play out, and it's going to be a really nasty economic situation, not only for the US, but the world. And I think that's why gold has repriced. The gold is saying, forget what the governments are saying, forget what the market makers are doing to hold the price down. We're going to run. And I think you're right. The control of the gold market's gone from the Western banks. They don't control it anymore. And I think it's because other countries and people around the world are saying, we've had enough. We're tired of the dollar system. We don't believe the United States. We don't believe our own governments. And we're going to gold. And that's what's happened. So it's this very sort of black market or gray market move into gold as the governments are trying to cover this up with these cover stories. But the people know. And I think that's why we're starting to see retail finally get into it. But it's this really hairy situation, Andrew. And I don't think people really understand quite how bad it is. But I just went through traveling around the world and went to 4 different continents over the past year. And I've been talking to government officials. We talked to government officials in the Malay government. We've talked to government officials in Panama. We talked to government officials in different places in Africa. And it's not a pretty picture. It is not a pretty picture economically. I think the feeling I got is that the government officials are worried that they can't stop it if we hit a recession. Like there are a lot of people that recognize they need to get off the system, but they're so scared to get off because of the crash. And it's like deer in headlights with some of these people I talk to. It really is we're headed for a big one. And I've said it for years. When I started writing in 2009, I wrote the book. I said, we're headed for, the book was called Drop Shadow: The Truth About the Economy and How to Avoid the Next Financial Collapse. And we're here right now. 15 years later, we're finally on it, and it's going to be a collapse. And I don't care what the government says. It's like they can't cover it up anymore. They've been trying, but they can't. And we're sitting right there. We're on the edge of it. And what's going to happen, is anybody's guess. But, I don't envy the Fed. I don't envy Powell. I don't envy Trump. I don't envy anybody who's dealing with this economy, because it's going to be a nasty, nasty situation.
I mean, who's left to buy US Treasury debt? I mean, it already we're seeing every other global central bank, Asian central bank, even the Bank of International Settlements has gone long gold. And we see Swiss pension funds talking about, openly saying, well, why don't we divest some US Treasuries into gold? We see the head of UBS saying, really suggest that people do swap some US Treasuries into physical gold. I mean, and it's physical gold. Then no one wants to touch the paper stuff, because if you're dumping one paper instrument for another, you've gained nothing. So this is so interesting. And what I hear from you is, look, guys, this is an action point. This is our action point. Listen to what we're saying. Listen to what Robert's saying here. You have a window of opportunity to actually take responsibility, each and every one of us, for ourselves individually, but collectively, we have the solution. And when mathematically it will fail, the system you're talking about has to fail. Every fiat currency has failed. So you need an alternative. What is it? There is only one alternative to you. And largely it's gold and silver. And there are other things that you could look at too. But that's incredible. I think that's what I'm hearing from you, Robert, is do something about it.
Yeah, take control in your own life. I mean, if nothing else, just look at your finances, look at your debt levels, and just protect yourself. Whenever you go into recession, this is what you want to do. You want to make sure you're secure with your income source, whether it be a job or a business. You want to make sure that you're underspending your budget. You make sure you have some held back. You want to make sure that you can survive in an extended recession. And by the way, these come every 4 to 10 years. It's been 15, 16 since we had one. We're overdue because of all the shenanigans of the government. But this is going to be a cyclical one. It's going to be an 80-year cycle one. It's going to be a big one. Okay, it's going to be bigger than 2008. The numbers are bigger. Rogoff and Reinhardt, who did that research in 2008 about debt to GDP ratios, in history, nobody's ever had a debt to GDP ratio as high as ours and not had a crash. Okay, so all the statistics indicate it's coming. And it's just a matter of how much time do you have to prepare. And I would say this, the U.S. government their shenanigans have bought people more time, but they've also put this shroud over the public that they don't know what's going on. So at the same time, it created an opportunity for people to save and get right financially and to prepare for all of this stuff. The people haven't known because what they're being propagandized really by the data manipulation and by the government that just doesn't want to tell them the truth. And I think that people, I always say, take it upon yourself to understand what's going on. Don't wait on your government. Governments in history have not been seen as bastions of stability when we get into these situations. I mean, governments are great. We need them. But when it gets to this point, we've overspent and the whole thing's a mess. Governments never come out and admit that. And look at what happened with the hurricanes in FEMA. We couldn't even save people from hurricane. The government didn't even have preparation to save people from a hurricane, which we get every year. I live in Tornado Alley in North Texas. We get, between Oklahoma, New Mexico, North Texas, Arkansas, all the way up to like Kansas, that we get tornadoes every year. And you know what? We don't expect our government to take care of us. They don't have the money. If you want a shelter, you build your own. You make your own preparations. It's no different. You can't expect, don't expect the government to save you. They're not going to. They can't. Their insurance schemes are broke. The FDIC doesn't have enough money. It has 1% of what it needs. One. That means 99% of your funds in the bank, you're toast. It's going to be a bail-in. Okay. That's in Dodd-Frank. It's law. So the government's actually set it up for it to survive at the expense of the American people. So if you're an American, and if you're in any of these Western countries, if you're an Australian, you have the corruption of the Perth Mint, and or you're in Europe and you're seeing what's going on with all the protests, and in the UK with them jailing people because they have an opinion on social media. The governments are trying to control the narrative, and it is not working. So it does create a window of time if you're educating yourself, but you must educate yourself and you must act. You must, because once this starts, it doesn't stop. It moves fast. The buildup to the crash takes years. The crash itself just goes like that. It's just fast. And the system is so fragile, anything could tip it over right now. Today, right now, as we're recording the video, something somewhere broke in a bank, which is going to eventually make its way to China and the US. And that's going to break. And we're going to learn about 10 years later when people write stories and like, well, it started in 2023 with blah, 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 and it led to this, and it was all the dominoes. That's the way it always goes in these things. It's already started. We just don't know when it literally just causes the Western markets to just seize and collapse. And we're not talking gold and silver. We're talking treasury, Forex, all of it, the stock markets. And I saw one more statistic I'll give you. I saw a report out yesterday on Zero Hedge, and it was written by one of the big banks. And they were looking at the treasury market. And they basically said, there's major issues in the repo market. That's overnight liquidity, which the last two recessions, we had issues with the repo market, right? That's liquidity. That's how people finance themselves. But also with the treasury market, the Fed is buying. And they said, analysts said, if the Fed stops buying, this stops tomorrow. The whole thing just goes bam. So the Fed is the buyer of last resort treasuries. We're eating our own debt, and legally in the US, when we take on that debt, when we buy that debt with our central bank, the central bank is not the only one responsible. The Treasury is not the only one responsible. The American people are on the hook for these financial accounts. So we're on the hook. And so this is a big risk to Americans that aren't taking care to understand what's going on and taking care of themselves, and demanding that the government be transparent with it and tell us the truth. But the government doesn't want to, because that in itself at this point may crash the market. So you got to stand on your own 2 feet. You've got to think of it as living in tornado zone. The government's not going to build your shelter. You got to build your shelter. You got even the government agencies designed to that don't have we saw that with the last hurricanes. They can't. Why would anybody, after seeing what happened with FEMA and the hurricanes and the fires in California, would anybody suspect that the government, if they can't handle fires and hurricanes, how are they going to hire a collapse of the economic system and a collapse of the banking system? They can't. That's your answer. So see the clues and do something about it, and support all the initiatives for sound money, and definitely support all these information sources. I don't know how much longer we'll be able to do this, Andrew. At some point, I suspect the governments are going to come down on us for telling the truth, especially when it gets bad. So I don't know how long our shows will all be on the air. Maybe we'll be lucky and we'll be on the air 5 years from now, but we don't know. But while you can get the information, pay attention to it and listen to it and absorb all you can, watch every video, because it's that reinforcement of, if you're new to this, you've got to understand what's going on. You got to understand quick, and you got to understand how to safely move somewhere to protect you and your family. And we're running out of time. We're really sitting at that waterfall edge. And I've said this the last couple of years, about the middle of this decade is when all of this stuff's going to get really hairy. And we're sort of in the middle to the end of 2025, and look at what we're seeing, and I don't think they're going to be able to stop it. They're not. So now is the time. I'm sure I'm the boy who's cried wolf to many people, but now I think people are starting to see the truth. They're starting to wake up a little bit, and now's your time to do it. You certainly don't have a lot of tomorrows left.
You know what, Rob, this is so important. I think, as you say, it's this is about education. This is about learning. Well, what do I do? Well, here's the problem. Here's a solution. Okay, so at least what you're doing is, don't go trying to make money. Just try and protect what you've got right now. If there's a hole in a bucket, why do you keep pouring stuff into it? So you have to fix that hole. And I think, I think people should follow you on your Freedom Report. People can access you. We're going to put the link. People are going to want to actually get in touch with you. Now, they can email you as well, Rob, can't they?
Yeah, email, catch us on social media, on YouTube and Twitter. We're there.
Yeah, do it. And I'm just telling people, do it, because if you've been inspired to do something, Rob, you can show people how to do it. You can give them the baton. You can actually make a difference. And it's one thing to, speak to your family, speak to your friends, get this information out, because it's coming. It's mathematics. It's going to happen. So, and a lot of people just don't have the resources. It's not so much that they haven't got the resources. It's just they don't know what route to follow. So I would encourage people to get in touch with you, to immediately take the action today, send you that email, hop on your report. Any questions, I'm sure he'll answer them. And you've got your Twitter channel, or your X channel as well. But Rob, thank you for joining us. I cannot believe it's been this long. We're going to have to please come back a lot sooner than this. I think maybe what we should even do is maybe in about 6 weeks, just enough time for us to start to head into that end of the fourth quarter. And let's just see where we are. And also we'll ask the same question. What has anyone done about it since?
Yeah, the last quarter of this year is going to probably be one of the most important quarter for us in a long time. If the U.S. consumer does not show up, it's over. It takes one bad quarter and this economy goes boom. And because it hinges, 72% of our economy is consumer spending. It hinges so much on the ability of the end consumer in the U.S. to buy whatever it is we're either producing, the service we're providing, or what we're importing. And if this quarter is not pretty good, at least, then that's a sign that we're in very, very serious trouble. And I'll be looking, quarter fours are always, why they call Black Friday the big shopping day after Thanksgiving in the US so important, why they call it Black Friday, it's not that it's a negative thing. It's not when the market crashed. It's Black Friday because it's when all the retailers finally get in the black. They finally have made enough money. It's that last quarter of the year is where most retailers and even businesses make their money, their profits. And it's where people's bonuses get based on. And it's, job creation for the ensuing spring is all based on the last quarter. So if we're going to get jobs back, if we're going to deal with inflation, if we're going to have, an economy capable of sustaining our debt levels, quarter four is always the most important quarter in the U.S. economy. And we're going to see this quarter, are we really bad? Are we officially heading into that recession? And if we don't have very positive sales numbers, then the U.S. is in deep trouble. And it's going to be absolutely critical thing to watch.
People can do something today. And let's circle back in 6 weeks if that suits you. And I'll set it up with the team if that works for you. And let's circle back and see where we are for that fourth quarter and our catch up. But thank you for joining us today, Rob.
Happy to do it. Thank you, Andy.
All right. Thanks for joining us on this episode of Live from the Vault, brought to you by Kinesis Money. And a huge thanks to Andrew Maguire and our featured guest, Mr. Robert Kientz, for cutting through all of the noise and sharing insights that you just won't find anywhere else. Now, if you like this episode, make sure you subscribe now if you haven't already done so, and turn on the notifications there so you never miss out on this information. So don't forget also to share this episode with someone who really needs to hear the story behind the headlines. And we'll be back next week with more hard-hitting truths from inside the precious metal space. And until then, thanks for watching. We'll see you then.